Hi, everyone. Brian Valerio, SVP in the advisory group at Alliance Advisors. Today, I am joined by Renée Soto, founding partner at strategic communications firm Reevemark. I asked Renée to join me today so that we could talk about the rise of the retail investor, the return of the retail investor, if you will. So the pandemic spurred a flood of new investors into the stock market. There's been a number of studies done that tried to analyze just how big the rise in retail investors over the past couple of years has been. And some interesting stats that I found was that Charles Schwab did a study earlier this year. They did a survey earlier this year that showed that about 15% of the current retail investors began investing in 2020, which obviously coincides with the start of the pandemic. And we all know that there's been a boom in 2021 in the retail investment space, and it continued. And there were some additional studies that showed about 7 or 8 million new retail clients entered the stock market in January and February of this year. We've all seen what's happened with Robinhood. So there's a lot of different avenues where people are coming into the stock market maybe for the first time. So even though these investors generally trade in pretty small amounts, they can impact a company's stock price and meeting agendas, which is one of the things that we'll talk about today. So Renée, let's talk about some of the questions that you get from your clients. Let's start with one of the ones that I know you get, and it's how do I deal with retail investors, or how should I deal with retail investors?
Yeah, absolutely. Thanks. So, I think for all of the reasons that Brian mentioned, engagement with the retail shareholder base is really important. And so, that includes communicating your business strategy and corporate initiatives, as well as the information in your proxy statement and other material disclosures with retail holders in mind. So, it can often be a good idea to revisit your investor materials to make sure, first and foremost, that the information is easy to find. Not everybody is so well equipped to use sec.gov and all of this. So, make sure it's easy to find. And secondly, that it's easy to consume. So that materials are written in a clear and concise way in plain English. This can be especially important if your company finds itself in a proxy contest or a shareholder activism situation where retail votes have the potential to move the needle. But I would say even in peacetime, it can be worth it to make an effort to educate your retail holders about your business and make it easy for them to follow you. I think, so sorry, go ahead.
No, I echo everything you're saying. The one point that I would maybe add in is you're talking about kind of contested shareholder meetings or just a routine shareholder meeting where you have a lot of retail holders. One thing that I think companies should keep in mind in terms of soliciting those votes, it's going to take more than just mailing to them and maybe even just doing phone calls. You should probably treat it more like a multi-pronged marketing effort where you hit the shareholders from a number of different avenues, whether that be emails, text messages, calls, additional solicitation materials in terms of additional mailings. There's a number of different approaches that you might want to consider in order to get out that typically challenging vote.
Yeah, I totally agree. And I think a good example of an initiative like this is probably AMC. And I understand that they are at one end of the spectrum. But they launched Investor Connect, which is, essentially a marketing campaign, but a new platform for retail traders, which is, very prominently displayed on their website. It keeps them up to date. It pushes information to the retail holder. So like you were saying, the different tactics that can be used to make sure that you're actually getting in touch with those holders and those shares. And it probably doesn't hurt that they also reward them with things like free popcorn in the movie theater. So
who doesn't like some butter popcorn at the movie theater?
Yeah.
So we can start going to the movies again.
Yeah.
So talk about where we can connect with retail holders as well, because where they exchange information and ideas is much different than what you see from a traditional institutional investor. So I know retail investors that are very popular on Reddit and Twitter and some of the other social media platforms. So what are your thoughts on where to meet these retail holders and where to engage with them?
Yeah. So this is, depending on how you look at it, a benefit of social media or maybe a peril of social media. But the bottom line is that social media has made it possible for retail holders to connect with one another in ways that they haven't been able to do so previously. As Brian said, this includes platforms like Twitter and Reddit and StockTwits. But the other thing it does is also gives social platforms give groups of retail investors the opportunity to connect with management if that's desired by management. We've seen some innovative and outside the box type things that management teams are doing, whether it's holding a public town hall that's broadcast, doing a Reddit AMA or an Ask Me Anything session, Zoom webinars. All of these things can give a direct line between management and the retail base, or even the broader shareholder base and the broader public, frankly. So I would start by saying that at a minimum, investor relations professionals should find out where the conversations are happening and then follow them on these forums. It helps gauge sentiment and could help gain intel on what's important to your retail holders. Obviously, you need to keep it in perspective. You may have one or a handful of very vocal holders that comment a lot, but they may not be generally representative of the overall retail holder base. So it's not always easy to know, but I would just say, keep that perspective and make sure you're not underreacting or overreacting to things. The other thing that I would point out is that there tends to be, a wide range of engagement levels on platforms like this. If you take a company like Tesla, for example, there's a more or less constant stream of conversation on Twitter about this company, its leadership, and everything that it does. But not every stock is going to have that kind of engagement and that following. So the first step I would say is to do like a mini audit on these platforms and see what the baseline is. How many followers does your company have on StockTwits? Is it hundreds, thousands? Can you get a sense of how many shares that represents? You may or may not be able to. What about Twitter? How active are they? Are they commenting all the time, or is it really more around earnings and other material corporate developments? Does your company have a dedicated subreddit devoted to it? Or is your company being discussed on other subreddits, like where investors chat and meet, like Wall Street Bets or Robinhood or stocks? So I think that's the first step, is sort of, find out what the landscape is and then, turn on listening mode. Regarding the question of whether to actually engage on these platforms, that's an entirely different question. And I would note that sometimes if you do a good enough job getting information out there in a user-friendly way, the retail investors themselves will do a little bit of this work for the company, to make sure that the messages are getting out there, that accurate information is being put forth on these platforms, because it's not always practical or advisable, frankly, to respond to every question or inquiry, that comes in on one of these forums. But if there are common questions or themes or misunderstandings that are coming up, there are some things that you might want to think about doing, depending on the situation. A company could include some of, some language in their earnings script or in their presentation that would address points that have been raised. They could do a retail focused Q&A and post it on their website on a quarterly basis. But, of course, I always have to, give the caveat that, compliance has to always be top of mind before you venture into any of these areas. You need to make sure that whatever you're doing is following Reg FD and any other disclosure regulations that could apply, especially if, as Brian said, you're in a proxy contest situation and you need to be mindful of filing requirements, legends, et cetera. So just check with your lawyers.
I think that the audit's a really good idea. And this is something that we find ourselves doing with some of our clients when they have shareholder meetings coming up and they have a large proportion of their shares held by retail holders. You want to take a look at what some of the conversations are on these platforms, because it can give you insight into maybe potentially looming issues. Is there a strong sentiment against one of the directors, or maybe against an increase in authorized type of proposal? We see a lot of negative sentiment from retail holders around that proposal, depending on some certain factors of the company. So it definitely gives an insight as to what might be an issue for the vote at the shareholder meeting, and then you can adjust your strategy as necessary. So it's really good intel to have prior to starting that process, and definitely one that I talk to my clients about when they do have a pretty large retail holder base. All right, Renee, so one of the other issues that comes up a lot is how are retail holders going to view some ESG type of issues, and whether that be how are they going to vote on a potential ESG shareholder proposal, or are they making investment decisions based off of perceived ESG risks and or opportunities. So what we're seeing is we're seeing a lot of millennials, a lot of people, in our generation that are going out there and they're actively voting at shareholder meetings in a way that their predecessors and maybe the baby boomers weren't necessarily voting as such an active way. It seemed that the retail community was always counted on to provide support for management, but now there's a bit of a pushback from the retail community. Some of the younger investors are pushing back when there's some perceived lagging issues in the E&S space. So how are you dealing with this issue? Are you finding this important to your clients, and what are you advising them on around this?
Yeah, I think, the data shows what I think anecdotally we're also seeing in terms of this generational difference, really. And it's not just millennials. I would say, there was a recent survey conducted by Equinity, and they found that 18% of retail shareholders in the US and the UK are actually Gen Z. So after millennials.
Sure.
And about eight, this just came out last month, so it's relatively fresh. And they said about 80% of Gen Z investors say ESG factors into their decision making, and 82% of Gen Z investors in the US say that they're frustrated when a company whose shares they own behaves unethically. So I think all of this points directly to the fact that making sure that you're effectively communicating your ESG initiatives is more important than ever. So, in terms of reporting, again, I think making sure that you've got something that's coherent and lays out your strategy, your goals, and how well you are executing against those goals is very important. This is, something that going back to the idea of proxy contests, these E&S proposals are becoming more prevalent. And we're seeing more retail support, as Brian said, away from that, steadfast supportive management to, maybe being more focused and more concerned about issues like this. And I think it's actually partly for this reason that we see, some companies in the world that are taking leadership positions on issues involving politics, ethics, social issues, environmental issues, climate issues, diversity, all of these things, because it's important to a very wide group of their stakeholders, which includes not only their employees and their customers, but increasingly their investors.
I think that's exactly right. And I find that when companies are willing to go out there and make these public statements, they need to be sure that what they're saying publicly matches what they're actually doing, because people will be watching and people will ensure that the public messaging matches the company practices. So that's something for companies to be mindful in this space. It's become an issue for not only the retail communities, but also institutional investors are taking a look at this to see if the two messages are coalescing.
Completely agree.
So thank you so much for your time. I really appreciate all of your insights. Definitely some really good tips and some things that I will share with my clients, largely my clients that are held by retail holders, but also some of my larger clients that have a smaller retail base. I think it's important for them to understand the impact that the retail community can have on them.
Absolutely. Thank you, Brian.
Great.